Welcome to CEO Money. I'm Michael Yorba. Thanks for joining me. We have Mark Yusko, CIO and CEO of Morgan Creek Capital with us. Mark, welcome to the show.
Oh, thanks for having me on today.
All right, my pleasure. For those of us who haven't met you before, please give us some background on Morgan Creek Capital and yourself, and then I'm going to dive right into these questions I have for you.
Oh, sounds good. So Morgan Creek Capital Management, we are a registered investment advisor based in Chapel Hill, North Carolina. So I would say my life's been a series of happy accidents, in the sense that I went to school to be an architect, finished pre-med, didn't go to medical school, went to business school instead, got into investing actually a little bit by accident, and then spent some time working at my alma mater at Notre Dame, and then at University of North Carolina, where I learned about the endowment management business. And then in 2004, spun out to start Morgan Creek to bring that endowment model of investing to other investors.
Right. Now, I understand you're making a big move in blockchain technology. Tell us about that.
Yeah, so it's actually really very exciting. So we just formed Morgan Creek Digital Assets, subsidiary of Morgan Creek Capital Management. And essentially, it's been a journey over the last 5 years. So a good friend of mine, Dan Moorhead from Pantera Capital, started a hedge fund 12 years ago. We were early backers of him when he did that, when he spun out of Tiger. 5 years ago, he said, hey, I'm shutting down the hedge fund, and I'm going to start investing in Bitcoin and blockchain technology. And I'm like, okay, really? Didn't know that much about it, but he said, hey, look at it with me. And I think, like most people, I started pretty skeptical, but the more time I spent on it, the more interested I got. We made some early investments with him on the picks and shovels side. So I didn't, unfortunately, put a bunch of money into crypto at that point, which would have been really good. But we did a little bit of picks and shovels, the exchanges, things like that. And over the next couple years, I went from spending no time on it to, a little bit of time. And then the funny thing is in 2014, I wrote about it. I write these big, long quarterly letters, and I wrote one paragraph in that letter about Bitcoin. And I had clients calling up and say, hey, what are you doing talking about this crazy stuff? We'll fire you. So don't talk about that. Like, that's when Bitcoin was $400. And I was like, there's just something here. I find that the more times people think you're crazy, usually you're onto something. So I started spending more time on it. And in the past kind of 2 years, I've gone from spending almost, 5-6% of my time to, now close to 50% of my time, because I really think this is the emergence of a new financial system. So, we launched a blockchain opportunity fund. We're going to do some other things in the space. And I just think this is as big an evolution in technology as the internet.
I agree. Expand on this emergence of a new financial system. I mean, we touched on it, but drill down on that for me.
Yeah, so if you think about technology and how it impacts financial services, if we go back in time, it's really just about computing power, right? Mm-hmm. So years ago in the 50s, mainframes came into being, and it wasn't just the government, and big corporations and big universities could actually do computing. And you start to see sophisticated application of that into financial services. And then in the 60s, the microchip was invented, and suddenly you could miniaturize things, and you started to see more adoption. And then in the 80s, 82, so it went 54, 68, 82. It's a 14-year cycle. Why 14 years? I actually don't know, but it's always 14 years. And in 82, you got the personal computer, and now suddenly you had big businesses, big financial services, big asset managers being formed. And at the end of the day, there's 4 assets: stocks, bonds, currencies, commodities. But there are ways to get access to stocks, bonds, currencies, and commodities, and things like real estate, equity of the deal, debt of the deal, land as a commodity, private equity, common stock, preferred stock, convertible bond. And so all these things started to develop as computing power became more ubiquitous. 1996, the internet. Now that was the big one, because that changed communication and commerce forever. And then in 2010, it extended that technological revolution to the mobile net. So now everyone had a supercomputer in their hand. Well, 2024, which is 6 years from now, okay, I think we're going to have what will be called the Internet of Value. And blockchain technology will do for value and ownership what the internet did for information and e-commerce. So this new financial system is really basically taking stocks, bonds, currencies, and commodities out of the analog world and bringing them into the digital world using blockchain technology.
I agree. Now, there's a lot of conversation going out there about the development of security tokens and digital assets.
Yep.
Talk to me about that.
Oh, look, it's really important because in the early days, there was one blockchain. It was called Bitcoin. And there was one way in, and this was the first cryptocurrency. And then other cryptocurrencies developed, you know, Monero and Zcash and others. But then there was this whole wave of ICOs that were created, utility tokens. And the difference between a cryptocurrency and a utility token is pretty significant, right? Utility token is loyalty program, access to a network, a way to exchange goods for services like Chuck E. Cheese tokens, or virtual currency in a video game. And so all these utility tokens came out, but people conflate the term cryptocurrency with those tokens. Security tokens is an entirely different realm, which we take the token technology, which is converting analog things, pieces of paper, into digital. So, you know, take ownership of a company, right? We have physical stock certificates. Now we can have tokenized shares, a tokenized cap table, or a commodity. You know, I think Bitcoin today is digital gold. That's a commodity. Longer term, I think it will be more money-like. But if you think about the evolution of any monetary exchange, it starts more a store of value, eventually migrates to more medium of exchange. So security tokens, to me, are the biggest opportunity going, because let's say cryptocurrency replaced all fiat currency. All fiat currency in the world, roughly $100 trillion. So if Bitcoin, if we move to what will be called the Bitcoin standard, right, and that became the global reserve currency, which I think is possible, that would be $100 trillion. Big number.
Right.
But all the assets in the world, private equity, venture capital, growth equity, businesses, real estate, oil and gas royalties, mineral rights, all the assets in the world are 700 trillion. Far bigger pool. I mean, real estate alone is 200 trillion. So as we tokenize those assets, and here's the big thing, is if you think about, in the old days, you and I would send letters to one another, right? I would write a letter or type a letter. I would fold it up, put it in an envelope, put a stamp on it. 3 days later, you would get it. You'd write me a letter back, and 3 days later, I'd get that. But we couldn't do anything with that printed letter except maybe make a photocopy of it. Once we digitize that with email, now I can copy paste that to thousands, millions even of people. I can manipulate it. I can take a piece from one letter and append it onto another letter. So I can change the communication. I can change the tone. So I can manipulate that data. Same thing's true with ownership. If you think about, take the Plaza Hotel in New York. Okay, how many buyers are there for the Plaza Hotel? 100, 200, 300, I don't know, some number. Right. But you got to come up with $600 million. It's a lot of money. So there aren't that many. How many people are there globally who would like to own a fractional share of that iconic piece of real estate?
I get it.
10 million? 100 million? A billion? Bigger number. And so that will change how we think about ownership and value. And that's what security tokens, and that's why I use that hashtag, you know, tokenize the world. I really think it has to do with the conversion from analog securities to digital securities.
I can see that. Yes, definitely. You're really onto something with that. How did Morgan Creek digital assets develop, now that we're on that topic?
Yeah, no, really, really important point. So, you know, when Morgan Creek or Mark was talking about blockchain and crypto and blockchain technology, people were like, okay, fine. I'm still skeptical. You know, show me what you're talking about. But that was fine. But I didn't really have any digital natives. I had some young people in the firm, but they weren't people that were involved in the crypto community or involved in coding or things like that. And I ran into these two guys who were running a fund called Full Tilt Capital. They had started off doing early stage investing. They were shifting to more crypto focus. They were really tied into the crypto community. In fact, one guy, Anthony Pompliano, is routinely listed one of the top 10 influencers in crypto because of his Twitter following and his writings on Medium. And it was one of those things where I'd met him 2 years ago. We co-invested together on one of the Lyft transactions. So we were early investors in ride sharing. We invested in Uber, we invested in Didi, we invested in Lyft, and we were making a private investment a couple of years ago in Lyft, and he and his partner also invested. So we met, but we didn't really spend much time together. We co-invested in a vehicle, great. But then about 18 months ago, I stumbled on him on Twitter, and it was one of those things where every time he would tweet something, I would like it. And then I started looking at it like, wait, I would have said that, or I did say that, and I felt like I was looking at a younger version of myself. Now, a more handsome, better, more articulate version of myself. But Anthony was one of these guys I just had to meet. And so reached out to him on Twitter. We met for breakfast. And in 5 minutes, I'm like, okay, we have to figure out how to do something. He said, well, just acquire us. So Morgan Creek acquired Full Tilt. We merged the teams. And so now we had Morgan Creek Digital Assets with a team, and the response in the community has been fantastic. So we're excited.
I would be too. I mean, it's obvious you're always ahead of the curve. That's brilliant. All right, why is blockchain technology so important? And we touched on it earlier, but I know that there's more to this than what we spoke about earlier.
Blockchain itself, the technology that is blockchain, which is really a merging of cryptography as well as distributed ledger technology, that's 30-plus-year-old technology. In fact, I wrote about this in my last quarterly letter. There's this guy, Tim May, in 1988, wrote the Crypto Anarchist Manifesto. And it's amazing. If you read it today, it's like it was written last week. I mean, he basically predicted all the things that were going to happen. And the challenge of it was, though, is anarchy is not viewed very well, right? It's like people, I always say this about whoever invented the term alternative investments was not a marketing genius, right? People don't like alternative stuff. They like traditional stuff. So anarchists tend not to be very inclusive and herd people. So that virus didn't really spread. His ideas didn't really spread. And it really took Satoshi-san to come along in 2008, 20 years later, and say, okay, here's what we think could develop into this idea of applying blockchain technology to the world in which we know it in terms of assets and ownership and money. And from that, 10 years hence, now we're 30 years in. And what's really interesting is in 1988, same time as Tim did his Crypto Anarchist Manifesto, The Economist magazine put on their cover that we'd have a global currency. They depicted it as a gold coin called the Phoenix. I always find it funny that Bitcoin is always viewed as a coin. I'm like, but there's no gold and there's no coins. It's ones and zeros. It's digital. But they predicted that 2018 would be the year. So 30 years later, here we are, 2018. We've got it. It's called Bitcoin. But blockchain is Bitcoin and Bitcoin is blockchain, right? Bitcoin is a blockchain. Right. It is the first application of blockchain technology, but blockchain technology is bigger, and it will be applied really to every business that has transactions. If you have transactions, you need to understand and appreciate why blockchain is it's a superior way of transferring assets. For example, you and I want to exchange money, right? I want to send you $100 because I lost a bet. Well, why do you and I need a bank to be the third party in the middle of that? Or why do we need Western Union if we have to go across borders? Why do we need Western Union to be involved? Well, we really don't, right? I could transfer you cryptocurrency over a blockchain, and instantaneously, with no settlement, we don't have to wait 3 days for it to settle like a stock transaction, I could transfer. We don't need a third-party trust institution. We don't need rent-seeking middlemen. Sorry, tongue twister.
Right.
And all of this comes back to this idea of a distributed ledger that is secured by the most powerful computing network the world has ever seen. If you look at blockchain networks, and what blockchain networks do is they secure the network through cryptography. And so the more computing strength that is applied to these technologies, the more powerful they become and the more robust they become. And that's the essence of where blockchain technology is going to make such a big impact. It's going to replace trusted third-party institutions. It's going to replace the need for rent-seeking middlemen. It's going to decentralize things that are more risky. Think about it. If you wanted to attack a company in a centralized world, you can attack one server or one bank of server. In a decentralized world, you could knock down one node, but there'll be thousands of other nodes that can still be up and running, and it's much tougher to defeat a decentralized network.
Yes, I agree. I've been working with that for, as a matter of fact, I had a friend of mine that was into it a long time ago. And now, finally, when this came up, I called him up. He's in Canada now. I said, hey, weren't you doing this? He said, yes, I agree 100%. You've got the path of the future. Now, that being said, the path of the future, people are always looking to the future, and I imagine they come to you a lot, but for your opinion on best investment opportunities moving forward, with all this being said, tell me about it.
No, look, it's really interesting. And so if you think of all technological evolutions and revolutions, the best opportunities early on are on the private side, right? You know, getting involved in Google when it was the number 16 search engine in a private company turned out to be a really good idea. Buying it in the public market on the IPO was still a good idea, but the people who made the most money were the ones that got involved in the private. So right now, I still think a lot of the best opportunities are in the private markets. It's in the development of new protocols, because the nice thing about where we are, as I said, 2024 is the seminal date when we're finally all going to recognize that this is a big deal. So that's 6 years from now. So this is like being in the internet in 1993 or 1994. And so back then there were hundreds of internet protocols, probably not hundreds, probably tens of internet protocols competing to be what eventually today there's like 5, right? TCP/IP, HTTP, SMTP. But back then there were dozens of them. And so today it's the same thing. Is there's Ethereum, there's EOS, there's Bitcoin, there's IOTA. There's all of these protocols being developed. And what I find just fascinating is there's this migration of talent from all the industries that you and I would consider to be great: financial services, technology, industrial design, things like that. And they're coming into this space. So venture capital is one way to play it: growth equity, venture capital. The second way is there have been some companies that are either public or who have come public that are kind of focused on this area. Now, there are two classes. There's the class that are all changing their name to something blockchain. Long Island Iced Tea became Long Island Blockchain. Kodak became Kodak Blockchain. Stay away from those. That's like when people changed to .com back in 2000 and thought they were doing something new. So those are not really interesting. Riot Blockchain, et cetera. Now, something like Overstock, which owns T0, that's kind of interesting, right? They could be the de facto standard for future security settlement when we all move to digital securities. Now, they'll compete against other incumbents who may or may not be able to compete. And it'll be like Netflix versus ABC, NBC, CBS. There's no reason ABC, NBC, CBS should have lost. They had a huge head start, but they didn't want to give up the ad-based revenue model to go after a subscription model. Netflix was starting from scratch, and good is the enemy of great. So, not giving up the good led them to be displaced by Netflix. I think the same thing will happen here. As an upstart that won't have the incumbent legacy issues will win. So we'll probably back those types of businesses. The second group of businesses are people who today are facilitating blockchain and crypto. So that would be things that make the machines to mine. And mining is a funny word. It doesn't mean digging things out of the ground. It means putting computers into the computing network to secure the network through cryptography. That's what mining is. And you get rewarded with coins for doing that. So whether that's AMD, which makes the GPU cards that are being used to mine Ethereum, et cetera, or whether it's TSMC that makes semiconductors that go into Bitmain machines to do ASIC mining and Bitcoin. But there are semiconductor plays that are interesting. You've got the consultants that are trying to get into this, like IBM, et cetera. Maybe. You got companies like Microsoft, which are realizing that they can also play a role in this wide level adoption. So there's some interesting things there. Those are quasi index investments, blockchain investments, but they're interesting. Third way is, buy these blockchain ETFs. And no offense to the people who started them, but I would stay away and run away because they're buying companies that are just peripherally involved. And if you look at them, they just basically track the S&P 500. So they're not interesting to me. Then you can buy crypto, and crypto, I think, is one of the best investments people can make today, particularly as a store of value and as a hedge against some trouble and turbulence in the traditional financial system. But I also think, where else can you find a business? And think about this. 5 of the 10 biggest companies in the world today are networks, right? Google, Amazon, these are networks. That's all they are. And 5 of the 10 largest companies globally are networks. What is Bitcoin? It's a network. What is Ethereum? It's a network. So owning pieces of these networks where they could go up 50, 100x. People say, oh, that's ridiculous. Well, it's not guaranteed, but it's possible. So there aren't many asymmetric return profiles like that. So putting a small amount of assets into direct crypto, I think, is interesting. And then finally, if you don't want to go through the hassle of having a wallet or having an exchange, you actually can buy. Right now, there's only a couple. They're listed trusts like GBTC. The problem is you pay a premium above the price. And so there is some risk that premium will collapse. Like if an ETF were to be approved, that premium would go away and you'd have a loss even if the price of Bitcoin stayed the same. So I think in the short term, until we see how the SEC is going to rule on ETFs, that's a little more dicey.
You've hit on everything. There's only one that I've thought of, and I want to run this by you since sure. I do have you here. Is I think that like you had mentioned networks, but I think that the tokenization in regards to incentivizing people to do business with you, yes, especially in my industry sector, is really where it's going to go. So that people can have a peer-to-peer exchange on a point of sale and be incentivized through tokens that they can, say, trade for a set of tires or a vacation with
yes,
Marriott, blah, blah, blah. That's where I'm headed with my company. We are firing on all cylinders on the same
I think that's a fantastic point and a fantastic opportunity. And that goes back into the area of there are utility tokens that are good, right?
Yep.
There are use cases that are really good. And you just described one of them. The challenge for people in the ICO space is it's like early stage and seed stage venture capital, right? 9 out of 10 of them are going to fail. And everybody's like, oh, well, this proves it's all scams. I'm like, it's not scams. It's just most early stage companies fail. So don't miss that point. So you have to align yourself with good technologists, good use cases like the one you described, or the guy that I met, this Shopin token. I mean, that's an interesting business model where they want to control users' shopping history data and then harvest back part of the ad dollars. Like, for example, when I go, like if I go within 10 miles of a Best Buy, my phone should light up and say, Mr. Yusko, we love you. Come on in. Special deals for you today. And I would go in, I get my special deal. And then, because they're not advertising to me, because I go there all the time, I have an addiction, right? I actually harvest back some of the ad dollars that would otherwise be spent on me because it's not as expensive. That's an interesting application of a utility token that I can get behind. So there are things in the utility world that are real, but like everything else, there are also bad people, and about 10% of the stuff so far are actually bad people. Just like penny stocks in Canada or penny stocks in the US, about 10, 15, 20% of them are bad people. So you just got to avoid that and try to focus on the technology. You'll be better off.
I agree with you. We're going to have many more conversations as we go forward. I'd like to be able to pick your brain on some of the new things that come across your desk so that we can bring those people out onto the show and then allow them to tell where they're taking the world in their own words. Is that all right?
That'd be great. Absolutely. That'd be fantastic. I can get Pomp on here one day, and he's even more colorful than I am and better looking, like I said. So happy to do that. And we can get some technical founders that can talk about the business from a perspective that I don't really get. Because I'm the guy coming from the institutional investment world who's raised his hand and said, this is the future, and I'm willing to go there. And Anthony describes this best. Says, you basically have two camps of people in the world. You have the crypto kids who are all saying this is the greatest thing ever, and then you got the old institutional guard that's saying this is ridiculous, and they stand on either side of a river and throw rocks at each other. But a couple, Mike Novogratz, John Burbank, myself, handful of others have said, no, there's something here, and we all need to spend the time to get comfortable. As I said, I've never met anybody who didn't start skeptical, did work, and then became enthusiastic. I know lots of people who started skeptical, did no work, and are still skeptical. Warren Buffett, et cetera. But no one that I know who spent any time on this has not gotten very excited about what's ahead of us.
Yep, true insights. I agree with you. All right, Mark, it's been a great interview with you. I really appreciate that. Thanks for being a guest on the show.
No, thanks for having me, and enjoyed talking with you, and look forward to doing it again sometime.
Me too. Thanks for watching CEO Money. I'm Michael Yorba. Don't forget, like us on Facebook, follow us on Twitter, and sign up for our YouTube subscription model. We'll talk to you soon. Thanks.